Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We love to look at real estate markets, and we're in a hot one right now. A few weeks ago, you heard us talk about the number one market, according to lots of folks, Dallas, Texas. That's where we're today, and you're going to meet lots of great Dallas real estate practitioners on today's program.
Are you ready to profit in paradise? Hi, it's Robert Helms, and if you think real estate investing means tenants, toilets, and termites, think again. Located just a short plane ride from the U.S., a virtually untouched paradise awaits, the beautiful country of Belize. When you go to Belize with the Real Estate Guys, you'll spend 4 fabulous days discovering one of the most intriguing real estate markets I've ever seen. With its jungle rainforests, pristine beaches, and 81-degree turquoise water, Belize is one of the most beautiful places on earth. Plus, it's considered one of the top 7 tax havens in the world. Belize property is on the rise, and many experts think the best is yet to come. But don't just take my word for it. Come experience Belize firsthand at our upcoming investor field trip. When you join us, you'll discover the many reasons we love Belize, like tremendously undervalued beachfront land, super low taxes, ease of doing business, and so much more. Get the details at realestateguysradio.com. Just click on events. See paradise for yourself. Click events at realestateguysradio.com, and I'll see you in beautiful Belize.
Welcome to the Real Estate Guys radio program. Thanks for tuning into the show. We're in Dallas, Texas today. Let's say hi to our co-host, financial strategist Russell Gray.
Hey, Robert.
It's always good to be in Texas.
It's awesome. I love it here.
Yeehaw. A week now I've been in Texas. You probably heard us last week on the show. And we heard it was the number one market according to the folks at PricewaterhouseCoopers. Not that they're the authority on real estate, but we look at all kinds of information, especially at the beginning of the year, to see what markets are hot. A lot of folks are excited about Dallas, Texas.
Yeah, Dallas has been a market, obviously, we've been paying attention to for quite some time. Anybody go back, look in the archives. Way back coming out of the Great Recession, we looked at different markets and which ones were positioned to rebound well and do well, and we identified Dallas, Texas as being one of those. Started coming out here, and of course back then properties were real inexpensive, and there was great demand and good rental demand, and the rent ratios and all that stuff was real strong. And over time that market changed, right? Dallas was no longer the best kept secret, and you've got people not only from the local area investing here, people all over the United States are coming here, but you got people from all over the world coming here. One of the statistics that I was really surprised at that I looked at about a year ago was about 11% of the sales were coming from China, which I thought was really interesting. Of course, now we understand what's going on in China a whole lot more, and there's been a capital flight, people trying to get their money out of China and into good quality assets like U.S. real estate. And when they looked, even though they love the coastal cities like San Francisco, they actually really like Dallas because of the strong local economy.
Oh, we've seen other changes in Dallas, right? For years and years and years, property values didn't change here very much, nor did rents. Pretty stable. One of the great things about this market is the diversity of employment. There isn't one industry here. There's a lot of big industries here, and that's also one of the things you look at when you look at real estate markets. You can make money owning a house anywhere in the world, but the market is such an important driver that you really want to understand what's beneath the demand for rent.
Right. We talked about this a lot. We look for jobs that are geographically linked, jobs that cannot be easily moved. And 2 of those are things when you're pulling things out of the ground, like oil and gas, which is Texas is known for. That's a job you can't move offshore. That's got to happen in the geography. You could make the argument about farmland and some other things like that too. In Dallas's case, you've got distribution. That's another huge one. Dallas is a major distribution hub. It's one of the reasons we like Memphis. It's one of the reasons we like Atlanta. Of course, over the last year, or the last at least several months, we've watched the price of oil take a precipitous decline. It tanked, if you will, right?
So to speak.
It's been a slippery slope. So at any rate, the big question now is, how is that going to affect the Texas economy? And in our case, how is that going to affect Dallas? My gut tells me not as much as it would maybe some other Texas cities where that is a much greater percentage. If you pie chart an economy, look at Dallas, it's a piece for sure. But they've got financial services here. Obviously, distribution, like we talked about, is here. There's a lot of other industries that are here in Dallas. Technology, for example, medical. It's a huge educational city. There's lots of great colleges here. So there's lots of reasons why people want to live here. There's lots of reasons why businesses want to locate here. There's lots of reasons why people want to stay here after they've come here. They want to settle here. Colleges is a great way of bringing people in. So Dallas has many, many things going for it. Now we're at a place where people are saying maybe real estate's in a little bit of a bubble. We don't know. We'll see. how resilient would Dallas be? It was very resilient last time, so we're here to check all that out.
Well, and the market may be too good. Is it too late? Is there still opportunity? That's what we'll find out when we come back. You'll meet some Texans. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program, the number one downloaded podcast on real estate investing. Thanks for tuning in today. Yeehaw, we are in Dallas, Texas. Let's meet native Texan, Mr. Jay Hartley. How are you, sir?
How are y'all?
Good, good. Welcome back to the show. We've had you on a number of times, and, it's interesting. If you want to know the pulse of what's happening in a rental market, talk to a property manager. So you've been in the property management business a quarter of a century. How is it today? What's it looking like today in terms of tenants and just all that stuff, Jay?
We are rocking. The demand is just through the roof. Housing prices are going up. Rents are on the rise, and I love it.
Well, that's a good point, because when we see a market get strong based on appreciation and housing prices going up, doesn't always mean that rents go up, and we want them to as investors for sure. So you deal actually in a pretty wide range of property, but the bulk of what you guys manage is single family. So how is that working, and how do tenants take, say, a rent increase?
Well, they are coming to expect it. It's becoming easier and easier to justify a rental increase because of the market the way it is. And it takes me about 30 minutes to convince a tenant, if they're having any reservations about paying a higher rent, to let them go look at a couple of other properties and see what they're renting for. And most of the time, any tenant that I have and I tell them their rent's going up and they can renew for another year or 2 years or what have you, they're okay with paying more because they know what it's going to cost them to move and then pay the same rent or even higher than what I'm offering.
Now, are you seeing a change in terms of how frequently people move? Is that a change in the marketplace?
It is. Tenants are staying longer and longer, and it's surprising. I mean, we have become accustomed to multiple year leases, and we've had to try and work that into our model to where we're increasing. If somebody wants to do a long-term lease, we'll work it out, but we need to build in some increases so I'm not losing my clients' money.
Now, one of the things, a metric we look at when it comes to marketplaces is days on the market. How long does it take to turn a property? And I can remember, since we go back years and years, there were a few times in this market where it was a couple months sometimes before you find a tenant. What does that look like today? A property comes vacant. How long does it take to get it turned?
Typically it takes about a week. We could see anywhere from a week to 15, 20 days, whereas in the past it was months at some points. A lot of times we'll have the property leased to a new tenant if the old tenant's moving out, or we're buying and rehabbing a property. Before it's ready, we'll have it rented and a new tenant scheduled to move in.
Now, let's talk about kind of the size of your company. You're about 800 houses under management right now. So we ask you that almost every time that we see you, and that number's always gone up. So you're continuing to add investors. Your client base is typically a real estate investor who has a house or multiple houses. How is that? Are you seeing your current investors doubling down, buying more? Is that the key, or are people saying, well, the market has gone well and we've seen appreciation, it's time to get out?
I'm seeing both, and it's hard to adjust. We are seeing the clients that have owned their homes for 8 and 10 years that now see such an increase in their values that they see it as an opportunity to get out. But I also see others where they just want more and more. They see the market on the rise. They know we're nowhere near the peak, so they're buying as much as they can get a hold of and as much as I can find for them.
And that's part of it, right? If I look at this marketplace and say, man, I'm sure glad I bought houses 10 years ago. At the same time, a person coming in brand new, first-time investor, maybe they don't even own a property yet. There's a lot of reasons that this market makes sense because of what we talked about in terms of the durability of the tenant base. But is it too late? Are the properties still performing at today's rent and price value?
You know, hindsight is always 20/20, and I've listened to so many experts come on your show for years and years, and I wish we could have convinced people 5 and 6 years ago to come in droves because we needed them as much as we could get. And if we could, we'd be wealthier and smarter for it. But it's not too late. There's still opportunity to be had. And if you're smart, you'll get off the couch and get up and buy some real estate and help us fill the demand that we have right now.
Well, and one of the things we love about you, Jay, is you're a guy that walks your talk. You're an investor and a landlord, but you don't manage your own properties.
No, I don't. I found out a long time ago it's not a good idea for me to be personally involved in my investments. So in our company, no one manages their own portfolio. So, and in actuality, my brother manages my homes. I manage my brother's and my mother's, and all of our employees follow suit. So we don't want to become personally involved. I don't care what the tenant's story is. If you can't pay rent, you got to go. But I want them to pay rent, and if I'm personally involved, I'm liable to make a bad decision. So I don't.
That's such an interesting mindset there. Now, one more thing about property management that I want to cover one quick thing quickly with you, and that is for folks that maybe aren't familiar with Texas, we always like to, when we go into a market, ask, is it tenant friendly in terms of the laws and so forth? Is it landlord friendly? And Texas, the answer is obvious to us, but what say you there?
It is very landlord friendly. Some of the horror stories I've heard from other parts of the country just make me cringe when I hear the things that people have to go through in different states. We won't name any of those, but in Texas, it's very easy to be a landlord. We're able to evict quickly if we need to. The laws definitely favor the landlord.
Good stuff. Now, one thing I wanted to ask you about, and this is more about that whole eating your own cooking thing. You saw this market get strong, and one of the challenges last year when we talked was there's not a lot of inventory available. The hedge funds had come in, and we've been squeezed out in terms of margins. So you actually took kind of a detour, if you will, and looked at building some property. Talk about that.
You know, we try to follow market trends the best we can, and we want to be ahead of the curve and know where the pitfalls are if we can avoid them. So one of the issues that we saw coming down the pipe was that we didn't have enough inventory and the deals were not strong as far as being able to buy properties and get them for investors to where they could really make the great cash flow that we were expecting. So one of the ways that we tried to offset that was instead of buying, rehabbing, and leasing them out and selling them to investors, the turnkey model, we were having difficulty with that. So one of the solutions we came up with was we decided to start building our own homes. So initially I went out and I hired a good builder, a very reputable builder. We started buying lots and land and started building our own homes, leasing them out, selling them to investors at what a cheaper price than what they would pay from a regular builder.
Yep.
And that was a very good model for us. So we've enhanced that as much as we can. And that seems to be really growing for us. And I'm glad I took the risk. I was a little nervous about that at first because I'd never built a home in my life. But I got the right members together on my team, and we're very successful at it.
All right, good stuff. Well, as always, great to see you. Thanks for the update.
Thanks. Appreciate you being here.
There's Jay Hartley. We're in Dallas, Texas, talking about what's happening in this fine market. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hi, this is Patrick from Paradigm Life. I've recently written an ebook called The Perpetual Wealth Strategy. The ebook discusses one of the best investments, real estate, combined with a financial vehicle used by the wealthy, many U.S. presidents, famous actors, athletes, and even Houdini himself. You can download the ebook for free in the resources section on the Real Estate Guys Radio homepage. Don't wait. Go download it now.
Hi, this is Gene Epstein, economics editor from Barron's, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, no matter how you're listening, whether it's on the radio, on the podcast, or some other way. We're in Dallas, Texas, talking about the market and what's going on. Let's say hello to our good friend, Miss Pam Blanco. How are you?
I'm good. How are you?
I'm good. I hear you're busy.
We're very busy.
Yeah, tell us about the market. We are excited to be here and here, from afar, people are saying Dallas is strong. We wanted to get on the street level and say, you're working with clients. What's happening here locally?
Well, obviously there's a demand for inventory. We have a shortage, so we've got a lot of buyers that are still looking for properties. We're starting to see more inventory come back on the market, so we're seeing some foreclosures, so we're able to get some deals. Still, the hedge funds are in buying, so they're a little bit more educated now, so they're not just paying way over market value. So some of our hedge funds are paying attention to market values and ROIs, and so we are seeing some good inventory come back, and we're starting to see business pick back up.
Well, this is interesting because you work with a lot of investors one-on-one. You've got certainly a book of clients, but you've actually represented some of those funds in the past.
I have.
Yeah, so you see both sides of it.
I do, and we actually still work with a couple of hedge funds now. They used to buy quite a few properties a month, so we're starting to see that slow down. So where they were buying 30 to 40 a month, they're buying 10 to 20. So they've whether it's been trial or error, they've educated themselves, so they're careful on the properties that they choose.
Now let's talk about the investors that you work with who come in, because you have a little bit different model sometimes with these folks. If someone is looking and interested in this marketplace, you'll go out and you'll help them find a property and then kind of manage them through the rehab of it.
So we have investors, we'll send them ROI sheets. We have a rehab team or a research team that searches for properties. We'll send them a list of properties. We'll walk them through the whole process from, their selection through actual closing. Once they close, we will actually perform the rehab for them. So they have a choice. They can either buy a turnkey property or they can get a little bit better deal and do the rehab.
Now, how do you decide how much work to do? When we toured a couple of your properties, it was amazing to see that you kind of just had a sense, or you tell me, of how much is too much work, because you can see an over-improved property. We're not going to get the return back, right, but enough where the tenant walks in and goes, yeah.
Well, most of it, we'll try to pick properties that don't need extensive rehab. So, we're looking at properties that we can work with some of the bones and some of the structure that it has. So if we don't have to replace the tile, we're not going to replace it. So we're going to pretty much design everything around what is actually there and what's functional. So sometimes, we have to replace cabinets, but I'm going to say our average rehab is going to be anywhere from $10,000 to $15,000.
Okay.
So we're trying to keep as much that is there without having to replace it to save them money.
And because there's demand on the trades and so forth, what's the time for a $10,000 to $15,000 rehab? What's a turnaround time on that?
Typically a week.
Okay. So you are looking at someone coming in, an investor coming in, buying a property that needs work. You've done a scope of work or estimate of value?
We do. We actually walk the properties. We get a detailed list of what needs to be done. We give them the price. So once the property closes, our teams have already been in there, so we just send them and they can get it finished.
Now, one of the interesting things as we've been getting to know each other over the years is that you do a lot of single family, but you also do some multifamily and duplexes, fourplexes. How's that part of the market right now?
Again, supply's pretty low, but when we're able to find some properties and we can rehab them, they're typically in lower income areas. So we're able to go in and offer a better product than what is actually there. So we're able to get higher rents. And so we're starting to set some of those trends in those neighborhoods where we're getting higher rent. And the expectation of some of the other owners is to rehab their properties as well. So it's kind of a win-win.
Now, in terms of kind of that tenant profile, how low do you go? I mean, are you all right working in some of the tougher neighborhoods, or where's kind of a sweet spot for what you guys are doing?
Typically, we're going to stay, we're going to stay in a little bit higher end. We're going to try to keep, I think our lowest rent's $1,095. So we try to stay in neighborhoods where we're not going to have a lot of theft, where we're not going to have a lot of turnover. Because what happens when you're into some of the lower income areas, these tenants typically don't have any savings accounts. So, one little thing happens, they get in a car accident, they can't finish.
So now imagine that you have somebody who comes in and they buy a property and they decide they don't want to do as much work as you might suggest. You just say, well, that's okay. You handle it, or tell me about that part of it. Because I might look at your sheet and go, well, $15,000, gosh, that makes a really, pretty house, Pam. But yeah, can't we rent this thing if I just slap on some paint?
And sometimes the answer to that is yes. So there is some cosmetic things that we can do that's going to make a difference and still be able to get a certain amount of rent. But obviously we've got things that we have to bring up to the landlord codes. So we have to make sure those items are taken care of. But some investors will come in and say, I don't want to replace the appliances. I probably have 2 more years left on the appliances, or the AC, I probably have 4 years left. They actually have a choice to go through our rehab list and pick out the things that they choose not to do.
All right, good stuff. Now, when you're looking at the other side of it, which is tenant demand, is that you're seeing strong tenant demand still?
There is a strong tenant demand, but what we also hear is that there's a lot of management companies out there that their rehabs are less than quality rehabs. So, they'll go look at properties that are in really, really bad shapes, and they know when they come to one of our properties that they're going to look very nice.
Well, and that's a key. One of the distinctions in saving money, right, as Brian Tracy says, the pain of low quality often outlasts the pleasure of low price. If you cut too many corners, then you're hurting yourself, because a tenant's going to look at more than one property and they're going to go, ooh, right, and get that feeling. Let's talk about from the acquisition side. If I buy a property where the work's all been done, I've got a tenant in there and I finance that, then everyone knows what that looks like. But in this case, if I'm buying the property, and we looked at one earlier, it was $110,000 to buy it. It's going to need maybe $15,000 worth of work. How does the financing work on that? Do I just have to come up with cash for the rehab?
Most of the investors will come up with the cash because they don't want to finance that. But there are several lenders that will actually loan money for the rehab. So they'll put the rehab in with the actual loan on the property. So they can finance their rehab in, and chances are their payments aren't going to be but maybe a couple of dollars more.
All right. Now, you're a Texan by choice. You weren't born here, right? And Jay and Jay know each other really well, and we always laugh at that Jay, because he's been here his whole life. What brought you to Texas, and even more so, does this seem like a market that has enough legs that you're going to stick around?
Well, I love the Texas market. I've been selling real estate for 20 years in this market, and I love it. I'm actually from Ohio, but I came here as a child, so I didn't have a choice.
You were drug along and you stayed.
I won't leave.
What are the challenges in a market like this? Investors are coming in, Pam, and they're saying, all right, I get it. Dallas is great, but what would they need to know before they come into a market like this?
They just need to make sure that they're with a good team, so that it's somebody that understands the market, understands the neighborhoods, understands the schools, somebody that can help them, in their decisions. They need a good property management company that's going to, look out for their best interests and make sure that they're managing that property.
All right, good stuff. Well, as always, thanks for your input, and we appreciate your time today.
Thank you.
All right, you're tuned to the Real Estate Guys radio program. More when we come back, and we'll play real estate trivia, give you a chance to win a prize next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Simon Black from sovereignman.com, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. This week, we're in beautiful Dallas, Texas, learning what we can about this marketplace. A couple of great guests so far, and we've got another one. But before we get back to that, it's time to play Real Estate Trivia, your chance to win a prize by knowing the answer to today's Real Estate Trivia question, which, as you can probably guess, is going to have something to do with Dallas. As soon as you hear the question and think you know the answer or just want to take a really good guess, send us an email to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. The first person with the right answer is going to get a copy of Robert Kiyosaki's latest book, Second Chance. That can be yours if you know today's Real Estate Trivia question. We started our week here in Dallas last week with Brad Sumrock, and we asked you this. Nearly one half of the world's production of walnuts takes place in one country. Which one? Well, lots of great guesses on this one, but the actual answer is China, followed by Iran. Most of the world's walnuts from China and Iran. Here's our real estate trivia question for this week. What was the original name of the football team that is today known as the Dallas Cowboys? Yep, the Cowboys weren't always the Cowboys. They weren't always America's team. When they started out, they were something else. What were they? What was the name of the Dallas Cowboys before they were the Cowboys? If you know or just want to take a great guess, send us your best guess to trivia@realestateguysradio.com. Include your name and your physical mailing address so we can send you the copy of this book, Second Chance by Robert Kiyosaki. That's today's real estate trivia question. We're talking about the Dallas market, and so blessed to have some folks who are working in this market. I'm very excited to introduce our listeners to someone we haven't talked to before. Let's say hi to John Larson. Hey, John.
Hey, Robert. How you doing?
I'm good. Welcome to the program. Now, you came to Texas via Michigan, so tell us about your real estate background.
Yeah, first and foremost, go blue, Pam. Yeah, so I started off as a high-end retail real estate agent in Michigan. Things were good. You know, I learned a lot from there. I learned how to interact with buyers, what certain buyers were looking for from a retail aspect. But then I, met a couple investors who were doing some high-end flips in Michigan, and I just quickly realized that I was getting a lot more steady business from the investor as opposed to, the finicky buyers are liars, which is something that we throw around in the retail real estate industry. But so I was just looking for more of a consistent money stream. So I felt like working with investors was the best option for me at that time in my career.
All right. We're focused, of course, today on what's happening in Dallas. And you specifically came to Dallas. So tell us why Dallas.
Well, plain and simple, jobs is why we came to Dallas. We are a turnkey provider. We do produce more of an A-class type investment, which, its average sales price to one of our clients would be $170,000. Average rents would be about $1,600. And we do believe that Texas is the best market right now in the major cities in Texas. These are the best markets that support that A-class model.
All right. And let's specifically talk about that model, because for a lot of folks, they want to look at a market and understand kind of the drivers behind it, right? In Real Estate Guys vernacular, the first thing is your personal investment philosophy, who you are. Next is the market. I've got to find a market that can deliver. Once I'm pretty solid on a market, I think the market is strong. Then I got to find a team because they're going to help me. And then ultimately the property. But the property or the team isn't going to work very well. So if we're talking about the market and how strong the market is, then the next thing is sort of those, you talked about jobs and the drivers and so forth, but then do the numbers work? So the A-class model is for a person that comes in and says, you know what, I don't want to do any of the work. I just want to come in and I'm ready to go. So when someone buys a property, an investor buys a property from you guys, what's it like?
Our properties are top notch. They're beautiful homes. I mean, you're looking at homes that range anywhere from 1,500 square feet all the way up to, I've sold properties that are 4,000 square feet. Fully renovated. We even changed down everything out to all the light fixtures are brand new. The cover plates for the electrical outlets and the light switches are completely replaced. You walk through one of our homes, it almost looks like it's a high-end flip, but it's a rental property. But we do also strategically make sure that we don't overspend on these rehabs. It looks nice. It's very appealing. It's appealing to our clients, our owners, and it's also very appealing to our tenants as well, to where the homes rent out quick, the tenants stay in the properties for it's about average 3 years, and they're actually willing to pay over market value for our rentals.
Well, this is interesting, and that's part of this getting our pulse on the market today, that because the rental market is strong, we looked at a couple of properties today that were representative and very clean, very well done, but also with that eye of tenant friendly, right? A tenant's not going to rip this thing up and have it be terrible. You use a lot of nice materials, but wear and tear friendly, I guess you might say. When a tenant comes and they're shopping and they're looking at 3 or 4 properties, and yours might be $100 a month more than the neighborhood property, but you can get that.
Absolutely, and that's the goal. I mean, obviously, I want to set my owners up for success as real estate investors. Yeah, when they walk through one of our homes as opposed to a home down the street, they're going to pay that extra $100 just because the home is completely renovated from top to bottom. Everything looks brand new, and it definitely is worth that extra $100 for sure to that tenant in that tenant's eyes.
Now, most of what you guys do is Dallas, but you have some other markets you work in. So since we're kind of focusing on this market, maybe compare and contrast a couple of the other markets that you guys are in and what the main difference is for an investor to consider.
Yes. So our main Texas markets are Dallas, Fort Worth, Houston, and San Antonio. We also do produce properties in what I would say is a B-class market in St. Louis and Indianapolis. Now, the reason why we're in Texas with the A-class model is because the median home prices right now are set at a rate where I can actually go in and produce a fully renovated turnkey asset in a nice, stable market, and then provide that to my clients at a 6 to 8% return. Coming from the Midwest, you see that the median home prices there are a little inflated to the point where I cannot actually produce an A-class property there and then give that property to my client at a 6 to 8% return. So I do produce what I would say is a B asset. They're more rent ranges from about $900 to $1,100. And my price points on those, I would say average sales price is about $100,000. Now, those are great markets for a B-class investment. However, like I said, I can't do an A investment there, but I do have other options for my clients as well.
Well, it's such a great point that every market is different, and where there's opportunity is different, right? To be able to produce the same quality of property we walk through today in one of those other markets, it's not going to make economic sense for an investor. But a lot of the folks who are selling property there are selling to end users. An owner-occupant will pay more for a property. So you're in a position where your primary client base are investors. Couldn't you put some of those properties in the MLS and get more for them?
Absolutely. I can sell any one of my homes on the MLS, especially here in Texas. The areas that we're buying in strategically, there's a lot of owner occupants in these areas as well. I obviously don't want to buy in neighborhoods where it's strictly renters, but I do get a lot of repeat business. So many of my clients, they own one of my homes for 6 months to a year. They come back and they want to buy again because they have such a pleasurable experience.
Well, that's what you're after, right?
Absolutely.
Good stuff. So now I would imagine that you also work with folks who are early in their real estate investment career. Maybe it's their first or second investment property. So what do you see with those folks, and what are the things you wish they knew?
Well, I wish that they knew a lot more of what went into actually buying these properties distressed, what went into the renovations. What we do, we go above and beyond. As a turnkey provider, we're assuming all the risk of buying these properties, at the foreclosure auction or sight unseen. We're assuming all the risk of the renovation process, where a lot of early or new investors might not know to check the foundation and check the main drain stack and things like that, because these are costly expenses, right? If you go through and just kind of throw some paint on a property and change the carpet out and the cabinets and whatnot, make it look appealing for a renter, but then a couple months down the line, all of a sudden the drain breaks, you got a costly repair there, or, the furnace goes out. I mean, these are things that we take care of on the front end. So our clients, our owners, our investors don't have to worry about this stuff coming up months or years down the line.
Well, the way Pam had talked about, a particular investor might say, no, I could squeeze 2 more years out of that. And certainly they're inclined, if they want to do that. It's their property at the end of the day. But you shared with us as you were touring us through one of the properties that you want to make sure that there's no major work, to the degree that you can ensure this, within 10 years. You want to have everything have a serviceable life for 10 years.
Yeah, absolutely. So any major fixes, roofs, all mechanicals, hot water tank, HVAC, those things, we need to make sure that there's at least 10 years left of life on those type of fixes. So that's another thing that we take above and beyond providing this turnkey asset. And I'm willing to warranty all these properties for 1 year after sale, because I do check to make sure all those big fixes, those big fix items, have at least 10 years left of life on them.
Now, we talk often about this idea of turnkey, and that means different things for different people. So in your world, is that a property that's tenanted already, or is it just all ready to go?
Yeah, my properties, when I say turnkey, that means that this property is fully renovated and there is someone in there paying rent right when you close on the property. And if for some reason whatsoever, the rental market right now in Texas is unreal. So I have no problem renting out my properties. But let's just say you close on a property that's under renovation and I don't get it done in time. You close on it. I'm still going to cover that rent because I'm providing a turnkey asset until we get that property finished and I have someone in there physically paying rent each month.
Well, I know we're here focusing on Dallas, and let's also talk just quickly about the other Texas markets and what you see there. If you're within a state and you see, a lot of the top markets in the predictions show we did a few weeks back were in Texas. Any nuances or differences there? What's an investor going to see in San Antonio or Houston that might be different than what they're going to find in Dallas?
Well, it's pretty similar. The price points are pretty similar right now. I think we're seeing in Dallas, prices are probably higher in Dallas than my other markets, and the prices keep going up faster in Dallas than the other markets. But in terms of the quality of house that you can purchase in these markets and what they rent for, we're all pretty much in line, all 4 of these markets in Texas.
All right, good stuff. Well, this has been awesome. We're going to plan to get you back on the show and talk in more detail about what you guys do, but really appreciate you sharing as the new kid on the block in the real estate guys world and the guy who strategically came to Dallas, what you're seeing in the market. Good stuff.
Yep. Thanks, Robert.
All right. You turn to the Real Estate Guys radio program. By the way, before we're done, we'll let you know how you get in contact with all these great folks in case you're interested in the Dallas market. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Hi, I'm G. Edward Griffin, author of The Creature from Jekyll Island, Second Look at the Federal Reserve. And you're listening to The Real Estate Guys.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
This is Todd Buchholz, author of Rush, Why You Need and Love the Rat Race, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. You know, I don't know if it's even possible, but if you can manage it, you might be able to squeeze one more cabin out of the Investor Summit at Sea. It's coming up, and oh my goodness, the boat is full, but we'll make room for it if we can. All the details on our website at realestateguysradio.com. Click on Summit at Sea and come with us for our 14th annual Investor Summit. We're in Dallas, Texas, talking about the market, and oh my goodness, sounds pretty good.
Yeah, it was great. So I guess in summary, I would say the bulls are still running in Big D.
It seems like they are.
Yeah, and that's good because you have to do that. You know, the thing is, I love stats, right? I'm the research guy, financial strategist guy. I like to go back and look at the numbers. The problem is when you're looking at statistics, you're looking in the rearview mirror. You're looking at what happened a year ago, last quarter. I mean, if you're doing real good, it's like, this is what happened last month, right? But when you get a chance to talk to people, boots on the ground, people that are dealing with tenants, dealing with buyers, dealing with sellers that are tracking, they know how many people are standing in line, right down to the neighborhood and product type. That's where you get real-time data. That's your thumb on the pulse. That's why we do these types of trips, right? It's the only way to do it. Because you see the data, you're like, okay, I can see what's going on. Well, we've heard the whisperings, right? Oh, oil is coming down and it's going to have this detrimental effect on Texas economy. And Dallas obviously is a big part of the Texas economy. It's the largest economy in the state of Texas. And you have to wonder, what kind of effect is that going to have? Those things show up at the street level. They show up in demand. Right? Tenants can't pay if they don't have jobs, if they don't have incomes. Prices can't get bid up if people aren't moving there. Those are the types of things that you don't see. And a lot of times people think that housing, for example, is a driver of economic activity. You hear the Fed say that all the time. Oh, housing, we got to stimulate housing because it stimulates the economy. My personal opinion is that's backwards.
It's the other way around.
Yeah, housing is a reflection of a dynamic economy. So when I come into a town like Dallas and I look at it in terms of its bones, the infrastructure, the diversity, all the things that we talked about at the top of the show, it's like, okay, this market makes sense. Now I want to take the temperature. I want to see, is this really manifesting at the street level? Is it showing up in housing? Not as somebody goosing housing to create an artificial reading, but is it really showing up where it matters? People like Jay, Pam, and John who are at the street level, who are bidding on properties, who are screening tenants, who are placing people, who are having to push through rent increases and having, Jay's talking about, hey, the tenants are like, hey, you know what? You're going to have to accept this because this is the market, right?
Right. Look around.
This is the market you're in. And so for me, coming here and hearing all of this from these guys is exciting because, I started to wonder, is this over? Yes, I know that you can't buy the properties as inexpensively as you used to. I get that. And so that's just the price you pay. If we do have an economic downturn, I hope everybody's excited about that, right? It's not something to run away from. It's going to be an opportunity to step in by. Jay said, hey, if only you guys would have been buying 5 or 6 years ago. Well, these things run in cycles. The big question is this bull in Dallas done running? And I think based on what these folks all had to say, not yet. Probably still time to get in and take a look at it. So I'm glad I'm here.
Hearing John say that, well, the prices are higher in Dallas and they're going up higher in Dallas. I mean, I don't think you've ever could have said those words in the past, right? 10 years ago in Dallas, I mean, the price was the same as it was last year.
Well, that was one of my big things. When we first started coming here on field trips, I was in Los Angeles in 1979, 1980. I commuted from Rancho Cucamonga, which is way out in San Bernardino County, all the way into the beach cities where I worked in Long Beach. And so I got a chance to cover a lot of ground. It was more than a 60-mile one-way commute. Back then, there was open space between the cities, right, as I would come through. Today, it's not like that at all. No. It's one big blur. When we first started coming to Dallas, I noticed that these cities and all this open space, Grand Prairie, for example, used to be this grand prairie between the two metropolitan areas, right? And now it's beginning to blur in. And when you start to see that, you realize that a market changes its personality. The old Neil Diamond song, and I know I'm aging myself right now, clearly, but he opens up with I Am, I Said. In the I Am, I Said, he goes, LA's fine, sun shines most of the time, but the rents are low.
Rents are low.
Well, nobody says rents are low in LA today, but the market changed, right? He was talking about New York. It was really crowded, really competitive, really congested. Rents were high. You come out to California, open and cheap rent. But then a funny thing happened. It all filled up. I see that same thing happening in Dallas right now. And Dallas has gone from pre-crash being kind of a steady Eddie rental market to being an appreciation market that still cash flows. To me, that's a window of opportunity. If I could go back in time and buy in LA when property still cash flowed and hold on to those things for the next 10 or 15 years based on locking in permanent financing, I'm going to see an escalation of rents. I'm going to see an escalation of value, and I fixed my debt. That's pretty good. I'm not saying no predictions here from me, but I'm just saying when you look at it and you kind of look at comparing one market to another market, there's a lot of things I think still to like about Dallas.
Well, there's no real estate market that's risk-free, right? Clint Eastwood says if you want a guarantee, buy a toaster. But if you're going to invest in real estate, you're going to take risks. And I don't think it's if there's going to be an economic downturn, it's when the next one happens. A property that is purchased correctly, that has a bread and butter type tenant. It's not about the tenant in it today. It's about the person standing in line when that tenant moves out, right? If there's enough tenant base, you're going to weather that storm. Buying right makes a lot of sense, and not buying into the hype. What's great about a market like this is the diversity of jobs and industries means that there's a diversity of tenants. Buying something that is at the high end, that might work today, but that isn't going to work in every market. Buying at the super low end maybe doesn't work in every market. But when you're talking about those solid rental properties, that's a good thing to have in your portfolio. It doesn't mean you put all your eggs in one basket, but it's hard to go wrong.
Well, this is one of the things. You get a lot of market observers, and they try and dump real estate into an asset class and say, well, real estate's in a bubble. Real estate's not an asset class. Real estate can be down in one market, say Detroit, Michigan, and it can be up in another market, say Dallas, Texas, right? And so, John's story about moving because there was jobs here. When there's economic distress across the nation, then people move to where they have the best opportunity, where they have the best quality of life, where they can afford to have the things that they used to have in a more expensive market. So let's say that there's a downturn. You have to look at the major cities. Where would people want to move? I think Dallas personally has been actually a beneficiary of some of the weakness in other economic areas in the United States. Companies have moved here because it has a great labor pool, friendly business climate, friendly tax climate, great infrastructure. Companies come here, they create jobs, and people come here for the jobs. I think that if we were to have another substantial downturn, and I would agree with you, I think it's not a matter of if, it's a matter of when, I still think Dallas is going to end up being a winner. It's going to be on the short list of places people will go seeking a better opportunity. I think there are other places in the country that are large population bases right now that are not going to be places people want to go to. They're going to be places people and companies want to flee from. And I think when they look at Dallas, Texas as one of the choices, it's going to be on the short list of places they want to be.
So come see Dallas. If you listen to the Real Estate Guys for any period of time, you know that we love to go out and do our field trips, and we're going to plan one of those. We don't have a date on the calendar, but if you go to the website at realestateguysradio.com and look at events, you'll see the Dallas field trip. That's a place for you to say, hey, I'd be interested in that, and then when we have a date, we'll let you know, because the fine folks you heard today are very interested in showing you this marketplace, and you got to see the market first before you even think about buying a property. Understand what the drivers of the market is. Now, if you're ready to go before that, you're thinking, you know what, no, I get it, and I want to buy a house this weekend. Well, awesome. Go to our website, and you'll be able to, in our resource center, find links to find all of the folks you heard today on the program, and go ahead and reach out and make contact. They'd be more than happy to let you know what's happening in their neck of the big Dallas woods. Hey, big thanks to Jay and John and Pam for being with us today, and next week on the show, more good stuff. So tell a friend about the Real Estate Guys. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.